Good morning. Hello and welcome to a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC-TV18 Motilal Oswal studios here in Mumbai. I'm Prashant. With me, my colleague Nigel, and Surabhi is with us here on the program for the next 2.5 hours as well. Good morning, guys.
Good morning, Prashant. Good morning, Nigel. Morning. I think Nigel gave the most important cue as we were just discussing today's setup. It's Thursday, and that leaves just about, well, I count one day to go. I don't count today's. It's discounted.
I thought it's called Thank God It's Friday, or Thank God It's Thursday.
We start doing Thank God It's Thursday now.
Surabhi's in a good mood this morning.
Surabhi's in a good mood, so we'll have fun. I mean, let's just kick this off and set the ball rolling in terms of what the cues are looking like today. So, US stocks are up, and that's the good thing. Point number one. The bounce on US continues. The dip was bought. There was a dip after retail sales data was strong, but we ended higher. The Nasdaq ending at the day's highest point, 0.9% or so. Interest rates, market interest rates in the US also moved up. The 2-year, for example, hit 4.7. That was the high for the day, and it then retraced back to about 4.63. By the way, I mean, if you close above 4.5% this month, it's a powerful indicator, monthly powerful indicator, and that sets us up for 5.5, 5.6%. I mean, those are targets. But in any case, yields have been moving up sharply. In the last 2 weeks, for example, the US 10-year is up 50 basis points. I mean, that's quite something. The dollar index, it's up a little bit, 0.5%. We are closer to 104 than we are to 103 now. So that's the picture on your screen. And of course, I mean, what underpinned all of this was the fact that the US economy seems to be pretty resilient. Retail sales data was super strong. It's kind of becoming a habit. There's nothing sort of, middle of the ground in terms of the actual versus expectations. You look at the jobs number, which was shockingly strong, and you have retail sales data, which is also very, very strong, actually. The debate continues, right? I mean, even as the market has moved on, I mean, I don't know if it's really moved on. For now, the equities are higher. But the debate is on whether all of this strong data is really good news, whether this eventually will bring more Fed hawkishness, higher than perceived interest rates by the Fed, and higher rates for longer. So that's the kind of debate we are having right now. If you look at the rates market, that's basically telling you the answer is yes. Equities so far, and I mean, if you were a skeptic, you would say equity markets in the US have got blinkers on and they are marching on. But price action is what we have, and we'll pay attention to it on a day-to-day basis. The Nifty, just to come to Nifty and Bank Nifty price action, the markets here. So we had a good close, right? I mean, a good follow through after day before yesterday's rally. We are past the 18,000 level. We took out a small rising channel at 17,960. We closed above it, which also means that the Nifty is broken out of the big falling channel as well. Falling trend line from the high of 18,887, all the way down to where we fell on the day of the budget, etc. There's a falling trend line, and we've broken above it. We've closed above it as well. Next targets should be about 18,120. That's not very far away. I mean, 100 points will do it on the Nifty, but that's the next target. That 120 is the 50% retracement of the full fall from the all-time high to the low of the budget day on the 1st of February. Now, supports on the way down, the 40-day exponential and the 20-day exponential, which were resistances earlier. The levels are on your screen. 17,947 and 17,862 become supports in that sense, and they should ideally not be taken out on the downside if the rally has to progress. Bank Nifty, it's still not given a very decisive kind of breakout from its resistance zone. Bank Nifty needs to close above its 40-day exponential moving average. That stands at 41,857. So again, a good day should do it, not very far, but those are near-term levels we're talking about. And on the way down, Bank Nifty should not break 41,158. That's the low that we had recently. So just some levels and some kind of context to put the price action from overnight and where we might open up and trade. I think the SGX should come up on your screen. It's indicating a decent start the last I checked, so we will go with it. 50 points, I mean, 0.25% or so, 18,072. Guys, hi.
Hi, Prashant. I completely take your point on what's happening with the US market and that market, the equity market, having blinkers on, right? We were discussing this in Closing Bell yesterday. You've got all kinds of data that's pointing to, a very vibrant, sort of, not very vibrant, but reasonably strong, let's say, economy. The retail sales number that you mentioned yesterday. Yeah. You've got yields moving higher. The 10-year at 3.8 now. The dollar's gradually been inching higher. Actually, if you look at it for the better part of February, you've got to move towards 104 now. Does the US equity market care? Not at all. I think it's sort of looking at its own trend, perhaps. It's moving on technicals, perhaps. But that's an important cue. That market's going up despite a lot of the hawkishness and all this talk about whether the Fed is done or not. So that itself is a cue to watch out for. I then looked at the final FPI numbers as well. We know that FIs have been buying in. I just looked at the depository data to get the sense of what exactly has been going on. And the buying has been fairly robust. I mean, from that massive selling that we almost got used to. So these numbers, except the last bar that you're seeing, that's the provisional number. The other bars are the final depository numbers. So you look at that. I mean, you've got 1,700, 1,600, 1,500 crores kind of coming into the market, which is a very big change from the trend that we were used to earlier. The question really is that because today is Thursday and you anyway have the weekly expiry, will this move that's set in the market above 18,000, whether that pushes the FPIs to go ahead and cover more shorts? And we'll hear more from Nigel on that, on what the FNO setup is like. And last but not the least, levels, Prashant, of course, has already mentioned 50 DMA, 18,057. Let's see if we can cruise past that to begin with at least. And then the others that Prashant has been talking about. Finally, I'll also watch out for the Adani group of stocks yet again, because very interesting development. MSCI came out and said that they're pushing back the changes in the weight on two of the stocks, Adani Total Gas and Transmission. They're not going to do this in February. They'll now do it in May. So that's pretty interesting. The reason they cited, and I'm quoting it verbatim, potential replicability issues due to impact from price limit mechanisms. There's a lot of sort of technical wordings used there. Not quite sure what that means, but we're going to be discussing this with a lot of experts over the next 2.5 hours as well. But I guess, Nigel, the market, given yesterday's move, perhaps, and the kind of global setup that we have, looks all set to perhaps open up at least positive.
Well, that's right. Yesterday the big call was the Nifty had some unfinished business at higher levels. This morning, just looking at the data points and going by the SGX Nifty suggesting the big gap up, I'm wondering whether or not taking some money off the table in the near term could be a prudent strategy. The trend is up, but in the near term, you'd like to book some bit of profits. But let's run you through the setup then. We have crossed the 20 as well as the 100 DMA on key indices. That's the Nifty and the Nifty Bank. Now the final frontier will be the 50 DMA. Can we get past that? That's a crucial technical level. The global cues, well, equity markets are doing well. The Nasdaq did well. We have been pointing that out. There's a correlation between Nasdaq as well as the IT index out here, and that's being played out. But, a couple of cues coming there. The bond yield has moved around 3.8%. The dollar index is closer to around 104. And also, you have Brent crude that's holding above $85 per barrel. That's normally emerging market negative. So let's see how that plays out. And, the point that I made, since we're getting a gap up, we're going to be starting closer to around the 50 DMA. Maybe taking some money off the table could be a good strategy. In terms of the FNO cues, well, we're talking about the PCR. When it moves to around 0.7, 0.8, we see normally a bit of a bounce. Now it's moved to the higher end of the band. It's moving to around 1.4 odd. So that's another indicator that maybe in the near term, we could be in for a bit of a consolidation or maybe a bit of a downtake. The FI data in the FNO market, well, they added some mild shorts. The short positioning is at around 74%. Not too long ago, it was 84%. So some part of the short covering has played out. And on the option side, well, they bought more puts than calls. So in case things go wrong, there is cushion on the downside. But the encouraging part is they continue to write puts. And on an expiry day, that's weekly expiry that will play out today, you like that data point. On the call side, though, there was some writing. 18,050 call. Yesterday, it appears there was some writing out there. Though the 18,100 call, that saw some buying. In case things go right, then in fact, you're paying only 13 rupees and you're playing the upside with the expiry today. On the downside, 18,000 put, 17,950 put. There was writing being seen at those levels. So let's plug in the numbers then. Support for the Nifty, I think that base that we're talking about, 17,350 moved to around 17,550. I think the near-term base comes in at around 17,750, while on the upside, the 50 DMA, where we're going to start, that's a bit of a resistance zone. Similar is the case with the Nifty Bank, 41,200. That's been a good entry point, but the 50 DMA appears to be a bit of a resistance point. But if the Nifty Bank can get closer to that 50 DMA, then we are staring at all-time highs on the Nifty itself. So let's see how this plays out. But SGX Nifty indicating a start closer to the resistance zone. Maybe on expiry day, you'll want to book some profits.
All right. All right, we'll see. 18,073 is where the SGX Nifty is at this point in time. Before we start, let's quickly tell you what's lined up here in the first 30 minutes of the show. We'll get you updates on markets across the globe on emerging equity market strategist Adrian Movat will join us to discuss the global trade setup. Later, our research team will bring you CNBC-TV18's list of top 10 stocks for the day. And at around 8:30 this morning, we do a fundamental stock analysis with Amisha Vora of Prabhudas Lilladher.
Okay, let's kick it off then with the equity call. This one's coming in from Sanjay Mukim of JP Morgan. And he says that MSCI India has seen 5% cuts to the FY23 EPS estimates during the third quarter results season after 4% cuts during the second quarter. He says FY24 estimates have been more resilient, meaning implied growth has increased significantly. He adds materials and energy account for a large part of these changes, while banks continue to see upgrades and reduced FY24 growth forecasts. He says they remain overweight on financials.
All right, let's get you some money market views as well. On the rupee, we've got Parul Mithil Sinha of Standard Chartered who weighs in. She says that USD INR continues to face upward pressure in line with the upward move in the dollar and spike in US interest rates. 83 to a dollar continues to be a psychological resistance, and she expects 82.25 to 83.25 to a dollar range to hold. According to Parul, further moves in dollar INR would depend on global data, especially from the US, amid range-bound crude oil prices.
On bonds, Parul Mithil Sinha of Standard Chartered says domestic bond yields have seen marginal upward pressure on global rate sell-off post the strong US jobs data. The pressure on domestic market rates continues in the backdrop of higher than expected CPI prints, both in India as well as in the US. However, bond yields are likely to stay supported as scheduled auctions for the current fiscal year are almost over. Parul expects the 10-year bond yield to trade in a band of 7.3 to 7.4% for the near term.
Okay, we have plenty of stock-specific action that we're going to get to in just a bit in our special Top 10 segment. We're looking at Reliance Industries, Adani Total Gas, Adani Transmission, Adani Enterprises, ACCPI Industries, Patel Engineering, and Vedanta. They are stocks on the back of positive news flow. While we have only a couple of stocks that could react to potential negative news, one is Indicglobe Aviation, and the second one is Adani Power.